So hey guys, this is Aditya. Welcome back to our channel. It's been crazy time since we uploaded a new video. So in this video, we are straight going to hit towards the topic of this video. That's the difference between investing into mutual funds or investing into real estate. Now, many of the influencers which got arise after the COVID era, now they are promoting mutual funds and SIP in a full bulk amount, and they are actually insisting us to do more SIP so that it will create generational wealth. But there is a catch, guys. If you see, till the date, if anyone would have become a crorepati or a wealthy person through mutual funds or any kind of SIP, if you could name any few, then I'd be very much pleased to know it. I'm giving you 5 seconds. You can write it down in the comment section. Fine, you didn't find anyone who got rich by SIP. The thing is, if I talk about SIP mutual funds, it relates to the stock market. Now, you guys will ask me any kind of doubts that Aditya, people don't make money from stock market. Okay, that's great thing, but stock market has a variety of investment instruments. So if I'll say about Rakesh Jhunjhunwala, Vijay Kedia, Mukul Agarwal sir, Ramdev Agarwal sir, they also built some kind of generational wealth through stock market, but that was not actually mutual funds. That was actually fully equity based, and I might add something into equity derivatives. But at that time, whatever the volume we used to trade right now, it was kind of 5% significant amount to today's traded volume. So the doubt of making generational wealth or a big amount of corpus through stock market is possible, but I would say that in equity, if you do your own research and if you do trading also, you can build some sort of wealth. But mutual fund is a consistent, it is a investment instrument which is made for passive investing, passive returns, because your involvement is not there, because your money is managed by a mutual fund manager. So things works like that. Now these influencers are actually stopping you and brainwashing you from buying any kind of real estate property, let it be any kind of land, any commercial property or any residential property. Even they insist that if you are in your 20s and if you are started earning well, then do start SIP, because at the age of 40-45 you'll be having a great corpus somewhere around 1.5 crore. If you start 5 to 6,000 rupees per month not EMI, it's a SIP for next 20-25 years, then you can add on some kind of 1.5 cr corpus. But my friends, what is the catch? I'll give you my example. The thing which I bought when I was 4 years or 5 years old, at the time of 2010, I would say, because I am born in 2000. I was born in 2005. So in 2010, I used to buy chocolates of 50 paisa, that Hajmola one which comes. But straight line today, okay, let's leave that example. I'll take a simple example of let's say a petrol scooty. So in 2015 or 16, our family bought a red color Vigo which used to cost 56,000 on road at that time. Straight after 10 years now, that model is not actually there, but the same specs of engine. Now it has doubled up to 1,14,000 ex showroom with the same engine cc of that scooty. So the thing is, after 25 years, the real estate which you are getting right now for 1 crore, what is the probability that you will get the same 2 BHK or 3 BHK in 1.5 cr in next 25 years? The value will be actually degraded. And also friends, I have not added the inflation which is getting added to our economy, because lifestyle inflation is somewhere around 6% according to one report. I'll share it. So you are making 12 to 15% on an average. If market performs well, you are generating somewhere kind of 12 to 15% of return CAGR, and you will pay off the lifestyle inflation somewhere around 6%. So net, if you earn 12% minus 6% inflation, then take 10% capital gain tax, so you'd be left around 5%. So it is not a significant percentage to grow your wealth. Okay, that's it. But what if at this age you took a home loan EMI, you bought a piece of land or any flat? Let's say it was costing you 1 crore at this point of time, instead of doing SIP right now. You have a 1 lakh rupees job, and you have a savings of somewhere around 25 to 30 lakhs you have collected in 2 to 5 years. I'm considering you are right now at the age of 25. So with a down payment of 30 lakhs, and you are taking a bank loan of 70,000, that would actually add up EMI somewhere around, yeah, for 20 years. If I consider the EMI amount, it would be coming somewhere around 65 to 70,000. I'm just telling you the number regardless of the salary you are getting. So you're paying off the EMI for 20 years, and some kind of report actually suggests that the loan which people say we take it for 20 years, actually at the report of HDFC Bank, I saw the interest paid on home loans was up to highest 8 years. On an average, a person pays the home loan for 8 years only. So the bank receive the interest for 8 years only. But you heard that you are taking a 20-year loan. So where is that 12-year going? My friends, you don't forget that if you are buying a capital asset, which means the piece of land or building, at the point of time, let's say a new high-rise building is getting constructed, you buy it at a initial pre-launch price. You got a discount of 10 to 15%. So you got it for 85 lakhs. After the completion of that project, you got a 15% discount that will get hike. And on an average real estate property, every year, on an average CAGR return, it gives somewhere around 10%. So you got a discount of 15%. Now you got a rise of addition of 10%. That's equal to 25%. If you don't live in that property, I'm just taking an example. If you kept it in our rent, so on a flat, on a good city, you can get a rental yield of 2 to 3% or 4% at max. If I talk about Goa real estate, because the flat price is also 1 crore available, and you can do Airbnb kind of things, and you can easily get the returns somewhere around 4 to 5% rental yield is best in Goa properties right now. So guys, a 10% appreciation you got on your asset, 3% is your somewhere around your rental yield, and 15% was the discount that now sums up equal to net 45% or 40%. Let's take it 40%. So on a 1 crore property, in 2 to 3 years you are getting somewhere around hike of 50% in 2 to 3 years. If you are getting 50% hike, you can sell it off and pay back the loan, or whatever the appreciation cost or whatever the rental yield comes, or your income, it pays off the amount. So after 10 years, when your property is totally EMI free, now you hold a asset which was bought after way before 10 years. It was valued at 1 CR. Now if I'm not wrong, then after 10 years the amount of that property would somewhere around at least 3 crores. Now guys, you say which property or which asset class or which instrument of investment will give you this kind of return? 3 crores property, I know it's a illiquid asset, but who wants to sell your assets daily? Like if you're earning well, you have a salary where you can feed your family, what is the need of selling your property? And please note that if your grandparents would have sold or would have questioned about the question that we don't have liquidity in real estate market, then you won't be having that piece of land or the ancestral property right now, which is somewhere around valued at 20 to 30 crores. Because if they had thought about selling it on a liquidate price and a high price, then you won't be lucky enough to get that opportunity of selling and enjoying your ancestral properties. But in contrast to this, mutual fund is way more liquid. As of you guys know, liquidate means if you can sell it and you can get the cash tomorrow. Now the problem with mutual funds is markets goes ups and downs every day. So on a click of note, on a click of your finger, you can liquidate your mutual fund. That is the problem, because the longer you hold your assets, let it be your mutual fund, equity, anything, because on a long run basis the asset gives you some kind of return. But as of date, we Gen Z's don't have passion, I mean sorry, we don't have patience to hold a asset for some years or not. That's why I actually prefer mutual funds are not a good investment for your starting life. Yes, they can build up some kind of wealth, but that wealth won't be considered as a generational wealth, or you cannot retire with that amount. uh, okay, there must be some questions like buying a flat in a tier 1 city for a Mumbai for 1 BHK in Bandra, Kurla or Andheri, you would get 1 BHK in 1 crore. But let's say you are in your hometown, and that's a tier 3 city with having a good population. You would buy a land of, let's say, 2000 square feet or 3000 square feet at a max price of 30 to 40 lakhs. Then you can construct a 5 BHK or a double story building on that piece of land, and also you can do some kind of interior. Still you would be left with some 5 to 10 lakhs. There you can add on your luxurious furniture inside your house, and that piece of property which you will hold in your hometown, no, that will be phenoxious. Because residential properties in hot location, I know you are not going to sell it anyway in future, but at least at a early stage try to build your any kind of asset, because bank will give you loan, any kind of loan, on a mortgage of any property. If you don't have any property or any assets on your name, then how can you consider starting a business? Let's say if you want to start a business after 10 years of your salary, I sorry, salary, I'm saying the job, you will be hunting towards the fund to start the business. At that point of time, if you have bought your property and you do EMI free for your house in next 10 years, after 10 years you can risk your job and start a business by giving the mortgage to your property and taking a 80% to 90% financing loan from your property. That would be actually great. That's why I insist. Also, I would add, uh, real estate made many millionaires and many billionaires. Right now, there is a boom of cryptocurrency and other asset classes. In future, I'm saying, yesterday the real estate was king. Today it is king. Tomorrow it would be also king, because mutual funds can go down. It can be in losses, because and land does not what depreciate anytime. It will always appreciate. At least 1% also appreciation will be done, but appreciation is there in real estate market. So that's pretty much it. And real estate property, if you do some kind of commercial properties also, your cash flow will increase. Because in mutual funds, if you consider investment somewhere around lump sum of 1 crore, if you sell it or liquidate it after 10 to 20 years, you would be paying somewhere around 12.5% as of now, the long term capital gain tax. After 25 years, what will be the long term capital gain tax? We don't know. So if you consider real estate, you are not going to liquidate it for lifetime. Also, without liquidating, you are getting the appreciation, and on appreciation, if you sell it any day, you will be giving that capital gain tax long term, that is also 12.5. But in mutual funds, you are not receiving any kind of dividends, but in your real estate property, you are getting a cash flow which is due to the rental yield. So that is adding up some 2 to 3% or 4% return on your property. And where the cash flow comes in, that is a great asset to build. So that was pretty much it for today's video. I hope you got some kind of little knowledge, because after 3 years I'm starting out my content creation. I hope you guys enjoyed it well, and yeah, please consider subscribing to the channel, because in future we are going to come up with a lot of many new and what new age type of information regarding finance and personal finance and business also. So yeah, that's pretty much it. Aditya Sharma signing off. Yeah, bye bye.